Welcome to Policy Bazaar. I'm Arjun Bhagat and with me is Yashish Dhaya, and we are going through whole life policies and what the best products are, Yashish.
Sure. So we were looking at 4 plans, and just let's look at them from a market perspective so that other plans can also be analyzed through the same lens. So we had LIC's Jeevan Anand. Just to explain, this is a policy that gives you life cover till you are 70. At the age of 70, a certain lump sum is paid to the individual, and then the life cover continues for the next 20 years. There are certain benefits here. So you can get a cover for personal accident, which is 5 lakh rupees enhanced. Maximum 5 lakh rupees you can get extra for a personal accident before the age of 70. In case you suffer a permanent disability before the age of 70, the first amount you were supposed to get as a lump sum can be a deferred amount. So you can get it over a period of time. So it can be kind of an income support also. So a good plan overall from a risk management perspective, but a long-term plan. The other 3 we spoke about, Sampoorn Samriddhi, Tata Mahalife Gold, Sampoorn Samriddhi for HDFC, Tata Mahalife Gold, and Bajaj Cash Rich. They come under pretty much the same bucket. So most of these plans, you would invest for a certain period of time. After a certain period of time, you would get a certain amount of money, typically about 2 to 3% of your built up corpus every year. And then whenever the individual does finally expire, all the way till the age of 100 years, a certain fixed amount of money would be paid to the nominee. And the individual can change the nominee's name all the way till the last day. Now, the Mahalife Gold plan allows you to invest for the first 15 years or throughout the duration, any one of them, throughout the duration of the plan. You can start this plan from the day a child is born, and that's probably the right time to start it. So you can start it the moment the child is born and continues throughout the life stage of that child till he becomes old, and whenever the child expires, his nominee, whoever is then, would get that amount of money. The Bajaj plan gives you 4 options. You can invest for 5 years, you can invest for 10 years, you can invest for 15 years or 20 years. So it gives you a little more flexibility rather than just the 15 or forever. The HDFC plan is also very similar to the Tata Mahalife Gold plan. These are not plans that you would invest for a high return. You will not get more than a 3 to 4% return on these over the lifetime of the product, but they are good plans for the purpose that they are built for. So think about that as you invest in these plans.
Right, Yashish, thanks a lot. We've got questions from our viewers. We've got Salman Chaudhary, and he says, I have Max New York Life, a whole life participation policy for the last 3 years, and I'm paying 20,000 premium. And he says he's totally confused. Should he continue in this or should he quit? Because as per his knowledge, this policy is much more useful when he is dead.
Okay, so if he is investing in this policy from a returns perspective, I think he should get out, because this is not a policy that's going to give him a high return. This is a long-term whole life plan, and he is absolutely right. This plan would pay him, would not pay him, would pay his nominee when he is dead. It will pay him very small amounts of 2-3% returns.
Right, we've got another viewer, Archie Gupta from Amritsar, and she says, I'm 27 years old and I'm not married. My annual salary is at 3.5 lakhs. And I want to take a life cover of for my parents for at least 2 lakh rupees. One is 57 and the father is 67. Please suggest whether at this age is there any good life cover available in the market.
Her parents at 57 and 60 need a health cover, not a life cover. So she should please take a health cover.
So a good health insurance policy.
A good health insurance plan. I would suggest she can go for any of Apollo, Max, but she'll get the red carpet of Star Health very easily in case they're suffering from a particular disease. They certainly don't want life cover at this stage. Now she needs life cover, and her parents can be her nominees because they may be dependent on her or whatever. And she should take a life cover of about 30 lakh rupees. It will cost her about 3,500 rupees today. There are 5-6 companies that would be in that range. Maybe 7-8 companies will give her a life cover. So please take a life cover for yourself and take a health cover for your parents. They need that quite a bit, but they certainly don't need a life cover.
Right. We've got Gotham Saluja from Facebook, and he writes, I've invested LIC in LIC Jeevan Saral life insurance policy with an annual premium of 48,000, and the policy tenure is 25 years. This policy offers me maturity, benefits, death, and he wants to know that as it does not guarantee any loyalty additions, should he go ahead with this policy or not?
So see, Jeevan Saral is a plan which is marketed as 250 times your monthly premium can be your life cover. I just want to put this very clear. Assume you're paying 1 lakh rupees a year or about 8,000 rupees a month as your monthly cover. At 250 times, 8,000 into 250 will be, according to me, 1,60,000, about 2 lakh rupees.
About 2 lakhs, yeah.
So you're going to get a 2 lakh rupee cover, or 20 lakh rupee cover. Sorry, 20 lakh rupee cover for investing about 1 lakh rupees. Now, you could actually have got almost a 8 crore cover. So it's not a very good term plan. That's number one. From an investment perspective, it's a standard traditional plan which is going to give you 3 to 5% returns. So if you want to invest in that, please go ahead. If you think it's better to invest in something else, do something else. But it's neither a term plan nor a good investment plan.
Thanks, Yashish. Now that's all the time that we have on our show. Our next show will be on top health insurance plans in the country. So keep writing to us at ask.policybazaar.com or on Facebook at PolicyBazaar India, or tweet us at PolicyBazaar_in. And that's all from me. We'll see you next time on Policy Bazaar. Goodbye.